Hi everybody, I've actually remembered to switch on my microphone, which is unusual at this time of the morning. Yep, I can see you can see my screen, which is great. So I'll just move that out of the way, and hopefully you can hear me loud and clear. I just thought we'd start with the majors matrix, which is all the currency pairs, or virtually all the currency pairs with the dollar. I've got pound dollar, dollar CAD, Aussie dollar top line, euro dollar, dollar Swiss, and New Zealand dollar down at the bottom line. And the reason for that is really just to highlight what's been going on in the last, since we were up about hour and a half ago, is really quite heavy selling of the dollar, which is reflected on the matrix. So it's just, first of all, a nice way to see volume price analysis across the matrix, because if you're trading one particular pair, if you're in cable, and you're looking at, maybe you're looking at the dollar CAD alongside, for example, which is obviously inverse in the spot market, and I'll go to the futures in a minute where it's all aligned in the same direction, but certainly in terms of spot, if you want to trade dollar selling, you can trade it in one of two ways. You can either trade it by buying a major such as cable, or you can trade it by selling a major such as dollar CAD or dollar Swiss, for example, down here. As Anna said, markets move much more quickly to the downside than they do to tend to the upside. So I'm always hunting out the opportunity to go short, even in a market price action like this, for example. My preference is always to trade short if I can, and not particularly buy the market. I like to sell the market all the time. So I'd be looking at, dollar CAD, dollar Swiss in this particular environment. But what this also gives you, it gives you another perspective, not only in terms of volume price analysis, but also in terms of other signals that may well influence the trade that you are in. So, for example, if you're in cable at the moment and you're long cable, what you're seeing down here on dollar Swiss may not necessarily influence the direction for cable, but it will certainly give you another piece of the jigsaw puzzle. You've got a volatility trigger down here on 5 minute. So we're expecting some congestion possibly to build, and possibly even a reversal. Now, you're not seeing volatility anywhere else, but certainly in terms of dollar Swiss, you are. Now, that may be unique to dollar Swiss, but again, it's just another fragment of information. You've got some pretty strong buying coming in here under this particular candle as well. You can see how narrow the spread is. So there must be some decent buying on there, which we've not seen any follow through from that. Then you're looking at the consequent candles that follow. Is that enough to drive the market higher, or are we going to see a breakaway? The trend monitor, as you can see here, is bright red. You wouldn't expect anything different at this stage. There's nothing to suggest that we're going to see a full-blown reversal. We've got congestion building. Once we break below 16 or 15 or 14, whatever just pop that up full size, make it easy to see. Once we break below that, we're into a low volume area anyway. Trend monitor's red. So in terms of a continuation of the selling of the dollar, it looks as though it is continuing for a while. However, that said, if you look over here on I think it's on 5 minute. Yeah, this is on 5 minute. I think it is. Yeah, 5 minute. The dollar is very, very strongly oversold in terms of the currency strength indicator. And certainly in terms of some of these pairs, the pound, for example, is getting up into overbought. Not there yet, but it's got a little way to go. The Swiss franc, you can see, is up here and overbought. The Aussie, which has been moving strongly, is also up into overbought. And in addition to that, we've also got the yen down at the bottom here. So it's setting up for some potentially nice reversal opportunities, of which this signal here may well be the precursor. You've got a little bit of buying coming in here on dollar CAD, not huge volumes under there. Nevertheless, you've got a little hammer candle forming there. So there is some buying in there, as I say, but the volume is not terrific. You look over on the Aussie dollar. What have we got on the Aussie dollar? What's the Aussie dollar setting up as well? There's a little bit of weakness coming in here. We've got some wicks to the upper body. It's continued higher, but then we've got a little bit of weakness here, more weakness on that particular candle. So we've got decent volume going on those two candles, and yet the expectation is at the very least for some sort of pause. This is not a strong signal. If this candle had finished up here somewhere on that sort of volume, continuation, it hasn't. We've got some selling coming in here. No great surprise. There's a rally here. Traders will jumped in, got out. Made some profit and just closing out some profitable trades. So there's volume here, not huge. but it's enough to give you an indication that there is a little bit of weakness. And when you overlay that with, where are we on the currency strength indicator? Let's go over to the multiples, which is probably easy to look at. There we go. Let's pull that up. Okay, now we're looking at it in multiple time frames. And what we're seeing here, this is on 1, 5, 10, and 15. So we're taking a time slice across, 15-minute sector. So what are we seeing now? Well, the heavy selling of the dollar here, heavy selling of the dollar, selling of the dollar, selling of the dollar. Not quite down, we're just pressing into oversold on 15-minute. But look at what's going on in terms of the 1 minute. We're starting to see that reversal take shape. We're starting to see that sell of the pound start to take shape up here. It hasn't moved through into 5, it hasn't been reflected in 10, and it certainly hasn't moved into 15. If this is a genuine change in trend and not simply a minor pullback or reversal, which happen all the time, if this is a minor pullback, then what will happen is the pound will go down to the bottom, the dollar will go up to the top, this will curl over a little bit, this will kink a little bit, this may be flatten out a little bit, and then if it's reversing again, then it'll come all the way back up again. So the pound will be down here somewhere, come all the way back up, and the dollar will go all the way back down again. And what you're witnessing in terms of the currency strength indicators is, as I say, little kinks, little curls, a little bit of flattening off here, not a great reaction here on 15. And this is a microcosm of a pullback or reversal. Now, if this is going to develop into a full-blown reversal over on these very slow time frames, this has to continue. It has to flow through into the 5 minutes. So we start to see the pound turning down. We start to see the dollar turning up. The same over here. And ultimately, it ripples across that time slice to become a trend reversal. But if it is only a minor pullback or a minor reversal, then that is what you're going to see the whole time. Now, there will be scalping traders in here on 1 minute and sub a minute. They'll be down on 15 second, 30 second, quite happily trading this to the opposite side. While you, as a slower term trader, in inverted commas, over on the 5, the 10, or maybe the 15, or even further out, you are simply looking at that as of very little consequence to you, because it's not in your field of vision. It's the analogy I've used many times before is of we love horse racing, we love the flat season. It's of having a horse that's blinkered, and the reason a horse is blinkered is because it gets distracted by other horses around it. So what you do as a trainer is you put the blinkers on, and the horse then focuses on the principle of the game, which is the winning line. That's all they're focused on, and they're not distracted by other horses around them. And in a similar way, it's what we have to do as traders. You have to try and put the blinkers on to focus on what it is you're trying to do in that particular time frame, and try not to get into this mindset, which, we've all done it. We're all human beings. Anna and I have done it many times, so we're not perfect, far from it. I wish we were, but we're not. You enter a trade and perhaps it doesn't quite go the way you're expecting. So what you do is you go down into the slower time frames for confirmation. It's called confirmation bias, because you have an opinion. You've now entered the market and you've now got an opinion. Well, I know I'm right. I've got to be right. And then you go down the time frames looking for confirmation. It's called confirmation bias. And that's what happened. And you'll go down into the slower time frames and say, well, actually, I'm fine here because this is only a minor reversal. And on the longer term time frames, I'm going to be okay. We all do it. It's very hard to get away from that, but you have to decide what it is you're going to do before you get into the market. Am I entering this as an out and out scalp? Am I going to be in for a handful of seconds, a handful of minutes? What is it I'm trying to do? Or am I going in for an inverted commas longer term position where I'm going to be holding on the 5, 10, 15? So you set up your store. It doesn't mean you cannot be all things to all men and women. You can, of course you can. You can trade different approaches. You can be a scalping trader 1 minute, you can take a longer term position another. All I would suggest is you do it in different accounts, because otherwise you'll confuse the hell out of yourself. So have different accounts is what we do. You know, you've got one account here which you say, right, okay, that's my scalping account. I'm in there on the minutes. This is my longer term trend trading account or swing trading account. You know, I'm looking for reversals in here, which are maybe on the 30-minute CSI or the 60-minute CSI, something like that. You have to differentiate, because otherwise you won't remember what's what. So you have to do it in that way. So what we're seeing right now is, as I say, we saw this little sell of the pound. The dollar is still rising nicely, so there is buying coming into the dollar. There's buying that's starting to kink up here on the 5-minute. We're starting to see that reflected. We're starting to see the Aussie dollar roll over. The Swiss franc is flattening. It's selling off here. But what's interesting with the pound is it started to rise again. So in terms of what is going on the chart, I don't even need to look at the chart, because now we've got the pound and the dollar rising at the same time. In other words, they're both being bought. So in terms of what that will look like on a chart at this very fast time frame, it will be in congestion unless there is enough momentum in this dollar buying that we're seeing to actually drive that pair, which they may be, because you've got a little kink there. So there may be sufficient to actually see a minor trend development. But what you're not going to see is you're not going to see a strong trend develop in that particular pair, nor indeed will you see that on the dollar CAD. You can see how strongly the Canadian is buying. So we've got very strong buying of the CAD, Canadian dollar. We've got very strong buying of the US dollar. So in terms of looking at that particular pair, again, it's not going to deliver much, nor is the New Zealand dollar, for the same reason. The one that will be moving right now is very much the yen. Yen is selling quite strongly. So you've got CAD, New Zealand, and dollar all rising. But bear in mind that that particular yen is also very strongly oversold, strongly oversold, strongly oversold. It also will very much depend on what is going on in terms of indices. We'll have a look at that in a moment. So it's a question of picking out, you know, where is my opportunity? What am I going to jump into, and how long am I going to jump into it for? If we go back to where we're, currency majors matrix, here we are. Okay, what are we seeing? Well, isn't it interesting? You know, I said, look at the dollar Swiss. You know, we had this volatility trigger. It's gone into congestion. I said there was some buying coming in here. You can see it, compressed candle. You know, if this was selling on this follow-through candle, it would have been down here somewhere. It isn't. So what does that tell you? It tells you there's buying coming in. So we're already getting a signal that potentially, you know, what we're in up here is maybe looking a little bit weak. And why is it looking a little bit weak? Well, you've had 2 or 3 signals, you know, effort to rise on strong volume. Remember, this is 8 o'clock UK time. So what we're looking at is comparative volume. This is 7 o'clock. This is the open of the European session. Volume increases. This is all Far Eastern Asia, breaking away from the volume point of control. We had a very strong level of support line building here, which is nice. Then the volume starts to build. Then we come to 8 o'clock, the open of the UK Forex markets. Lots of volume driving in. That's fine, you know, decent volume there. But then you start to see this weakness begin to develop, wicks to the upper body. And you've then got this candle here, which has got the same amount of volume, but the market's actually moved pretty strongly. And you think, well, you know, why have we got so much volume going in, and yet, you know, we've got quite a wide spread of candle, but it hasn't actually delivered. You've got a wick to the upper body. Now, what are we seeing? Further weakness coming in. We've got, you know, another wick to the upper, little bit of indecision here coming in, more of a doji than an upthrust candle like this, but nevertheless, you know, it's starting to look a little bit weak. So it's not a question of whether this is going to be a full-blown reversal and we're going to take the opposite position, which, you know, may well develop in due course, but it's a question of, if you're in a long position, at this point, you might be thinking this looks as though it could be coming to a pause. You'll obviously be looking at this in multiple time frames. The trend monitor has yet to transition, which is fine. It's just saying, look, hold on a minute. You know, I'm still maintaining this as a bullish momentum, a bullish trend. I'm not yet ready to signal that a potential pause point, which it will do by going into a darker color. But nevertheless, over here on the CSI, you can see the buying of the dollar is now starting to take hold. It has yet to develop on the pound, but it's beginning to curl. And if you look at the Aussie dollar, where are we? This one. This is already developing. You can see it here, the selling of the Aussie. We've rolled over from overbought. Dollar's strongly buying. Aussie is strongly selling, so we're starting to see a decent trend develop. You can also see that weakness here, effort to rally, decent volume falling back. Signaled again here, volume falling away, trying to rally, falling away. So you're starting to see the development. Now, where is that actually going to take us? Could go all the way back down to the volume point of control down here. The interesting part of that particular trade would be around this area where we've got a low volume node developing immediately below. Just move the chat box out of the way. You've got a low volume node developing below here. So if it gets down to this area, then it should move through there pretty quickly, because there's very little in the way of volume in this area to provide anything in the way of support. We have this very minor level here, which you might not be able to see it, but this has been tested once. So this is a minor level of price-based potential support as opposed to volume here, which is lightweight, which is going to provide very little in the way of support. But then as we dig deeper, as we move down into 30 and down into 20, through this wedge of volume in this area, that is certainly going to provide some support to that move. So looking at that as a short opportunity, and we're only looking at one time frame, we'd be looking at it in multiples. The question you'd be asking yourself is, what have we got in the way that's going to cause this market to at the very least congest or move into a sideways pause point? And that's how you assess the opportunity, because this volume here is pretty heavy. You'd be looking at it, if you were looking at this on 5 minute, you'd be looking at 1, 2, 3, 4, and so on, and seeing what's available there in terms of what is like to cause that market to pause. No change on the trend monitor, but guarantee you there'll be scalping traders in here, jumping in, just grabbing some pips and jumping out again. You, as a longer term trader, if you're on 10, 15, you may just be seeing this as a minor pullback. It's okay, I'm quite cool about that, and not really too fussed about it. Other traders will be looking at the CSI and saying, terrific, got an opportunity to short here, and we'll go down onto the 1, 2 minutes, so on and so forth. Let's go to multiple time frames. What have I got here? I've got pound yen. Just wait for that to build. Okay, so in terms of pound yen, wouldn't be the one I'd be looking at right now. Why? Because the yen is still flatlining down here and the pound's still sort of pretty flat up here, which is why you're seeing on 15 second and on the slower time frames, we're trading around the volume point of control. We've got this big spike in volume, big volatility candle, big signal that we're going to see some congestion building. We've got the volume point of control here as well. Lots of volume building around that region. Flip-flopping around up onto 1 minute. What have we got here? Confirmation again. Market makers are participating. Why? Ton of volume, big trap move, nice wick to the upper body, congestion. That may well develop into reversal, but even if you're trapped in this move, if you imagine this going on in real time, what that would have looked like would be a nice spike higher, very rapid price action, everyone jumping in on the expectation the market's going to develop further, and now you're trapped. It's about the fear of missing out. It's what the market makers understand in every aspect. They understand our DNA. They know how to manipulate it. And the way they, sorry, Don? They understand, as Anna says, our evolutionary biology. You can't help it. We all have it. We all suffer it. It is the fear of missing out. You see something fast moving, you'll see a trade developing quickly, you want to make some money, you're here to make money, and the market snaps higher or lower and you jump in. It's generally associated with volume, which will tell you the market makers are participating. They've moved into this, they've moved the price rapidly, and then they've dumped. The congestion phase, you can see the volume point of control has moved up here. It's not anchored in space. It's not anchored in one point. It's not a sea anchor that's just been dropped from a container ship and stays there forever. It will move around depending on the volume. And the key to congestion is it puts on the emotional squeeze. Because if you've gone long in here and you're subjected to this, bear in mind this is only a minute, so we're only talking about maybe 8, 9 minutes in here, which is bearable. But if you're on a 5-minute chart and you've got to sit here for 40 minutes, it's a very different cup of tea, I can assure you. So this is the emotional squeeze that's going on now, because they are now casting doubt into your mind as to whether you were right or whether you have trader regret for jumping in so early. In this case, it looks as though we are going to continue higher. The trend monitor hasn't done anything. It hasn't transitioned into a darker color as yet. And it looks as though we're moving up into a low volume area and possibly a continuation. But nevertheless, this is painful. And that's the power of the volatility indicator associated with volume. That is what you'll see. You just have to, if you're in a trade, if you'd got in down here somewhere and this is a long position you're in and you see this coming in, close out, or at the very least, close out most of your position. If you're scaling out and you've gone in with multiple lots or multiple contracts, take most of it off the table and just leave one to run. If you lose one, fine, you get stopped out. Okay, you've still got a chunk of profit in the bank. Or you close the whole lot out. If you're only trading one, take it off the table, bank the money. As soon as you see this trigger will activate in before the candle has closed. It's the power of the indicator. As soon as the metric's been met of a volatility of price action moving outside the average true range for that instrument in that time frame, it will trigger. Now, on a 1 minute chart, it's not so important. But if you're on a 5 minute chart or a 15 minute chart, it is important because, you know, if it appears in minute 2 or 3 and it gives you that warning signal, you're not then sitting through the rest of the 12 or 13 minutes stressing, you just get out. And that's the long and short of it. It's such a powerful indicator. It just gets you. In fact, one of our students did actually put up a message in the VPA chat room yesterday that it had actually got him out of trouble, or not out of trouble, but saved his bacon 2 or 3 times yesterday trading. And that's what it does. If you're in a position and you see one and you've got profit, close out. If you're in a loss position and it triggers, you've got a decision to make. It may get you out of jail or it may work against you. That's a completely different ball game, but at least you know, and it's always associated with very high volume. Now, if there's no volume in there, it's a trick, it's a trap move. In other words, the market makers have just moved the price around and they're not participating, they're just moving the price around to trap you into weak positions. But in this case, they've sold out heavily into the top of the candle and you know, they're just waiting now for the next phase of price action to develop. Selling pressure's diminishing a little bit here. You know, it's come back down to the volume point of control. Just to pick up on the VPOC, yes, it moves around because it will transition wherever the heaviest area of volume is developing. You saw it jump up there. So now we're in a congestion phase. We've got volume building. We may well get some on Anna's. You saw it down on Anna's chart. But when the volume of the VPOC develops, you will tend to get these very strong areas, these channels, particularly if you go in extended congestion phase. You'll get these really nice channels, particularly on NinjaTrader, of this the accumulation distribution with this thickening of the lines. So you get some above, some below. You get a nice channel with a VPOC in the middle, and it really gives you a strong sense of, if you're a breakaway trader, of moving away from that congestion phase and the very well-defined areas where you can place your stops, the ceiling of resistance, the platform of support. It's just a terrific way of combining, obviously, price-based support and resistance along with the volume-based aspect, which comes off the volume point of control. Still trading pretty much tight, pretty much within the spread of this candle. You know, we haven't broken away with any great conviction yet, and that's the power of congestion and the fear of missing out.
Sorry, David, someone said could you go back to the Aussie dollar and the Eurodollar?
Yeah, on the majors.
Yeah, I've asked which price.
Probably on the majors matrix. Eurodollar, that's the Eurodollar and the Aussie dollar. That was the Aussie dollar we were looking at earlier on. We saw the weakness coming here. We saw this little rally down here, this little reversal. 3 candles, volume's pretty equidistant on those. Maybe a little 2-bar reversal developing here on 5. So this could, if you overlay that candle on top of this candle, what have you got? You've got a little candle with a body, a little bit of wick to the upper body, but a deeper wick to the lower body. So indecision, a little bit of buying coming in there. Depends on the strength of it. You know, it's not looking hugely strong, but nevertheless, where are we on cable? We had the weakness come in, looks as though we're continuing. Interesting, down onto the dollar Swiss. Going to have a look at Eurodollar in a minute. What do we have? Well, we have the rally here, the 3-candle rally, but in terms of the volume on the last candle, it was falling away on the previous one. So that buying interest, if you like, is diminishing a little bit on here. So, you know, it doesn't look terribly strong at the moment. We've got a doji indecision candle here on good volume. So there's lots of indecision about. And if you look at the volatility candle here again, we are still trading within that range. We haven't broken free, you know, and it's another example. This would have been a quick move. Traders jumping in saying, oh, we've got a nice price waterfall. Okay, that's fine. Yeah, we've got rising volume. That's fine. Good. Okay, jumping in. Fine. No problem. And now they're trapped. and they're trapped in that congestion phase, and this is starting to be painful. They may well have got stopped out on this rally. If they've got a wider stop, they won't, but they're still not sure whether this is going to continue to the downside or move to the upside. The trend monitor is saying basically continuing to the short side. You know, it hasn't transitioned. There's been no transitional color yet to a darker blue or straight through to maybe or to a darker red indeed. So it's all, you know, sitting there. This is on Eurodollar. What have we got on Eurodollar? Again, similar sort of picture, really, moving into congestion. Lots of volume coming in, really not going anywhere. Weakness here, weakness here, weakness, weakness, weakness. So it's really telling you that, yeah, okay, fine. This may well not be a strong reversal from a primary to a primary. And it's one of the aspects of going back to what I was saying earlier about the whole business of on the fast CSI, if you remember, we were looking at that from the perspective, well, is this a reversal or a pullback? When you look at VPA in different time frames, it's a key aspect of applying VPA to the chart to identify whether the time horizon you're looking at, whether that reversal is actually a full-blown reversal. In other words, it's a primary trend. In this case, it will be a primary trend higher. Are we looking at this reversing into a primary trend lower? Or is this a secondary pullback against the primary trend, and therefore we are likely to see re-establishment of the primary trend in due course? And it's something we cover in detail when we do the deep dive into volume price analysis within the technical analysis module on the Forex trading program. Yeah, just going to grab a drink. Hold on a minute. Apologies, sorry, I just had to grab a drink. I have a frog in my throat. Sorry about that. Let's just have a look at going back to cable. Anna should just have a look at the 3 minutes. Just flick that over onto 3 minute. There we go. Okay. Okay. Sure. Okay. Let's have a look at this. We've got a lot of volume coming in here, and remember that when we're comparing volume, we're looking from this point onwards. So this is 8 o'clock London time. So we can compare volume here. When we're in the European session, we can compare it here, and when we're in the Far East Asia session, we're comparing over here. So we're always comparing like with like. When you look at an area of price like this, let's take a look at it. We're starting to see a little bit of selling coming in. We've got weakness here. So we've got, effort to rally and, really not going very far. We've come down onto the volume point of control. So at the very least, we're not expecting this to collapse through here for several reasons. First of all, we've got the heaviest concentration of volume here, so that's going to provide some support. The VPOC itself will provide some support, and we've got, pretty decent volume underneath. So this isn't going to collapse through. And it's when you see a price approaching a volume point of control in any time frame, always be assured that the market is very unlikely to move through that area quickly, because all that volume is going to act as resistance or support depending on the direction of approach, because it is layered with orders. There's all sorts of stuff going on in here. There's market orders, there's traders trapped in weak positions, there's limit orders, pending orders, all sorts of stuff. And that's what denotes the volume in these regions. And the second aspect of the volume point of control, which is perhaps a bit more nuanced, is this: that where these volume areas sit are considered important by the market for whatever reason. And where there is lightweight volume, the market does not consider those areas important. So when the price action approaches these regions of high volume or low volume, there is no reason to suspect that it will behave any differently. It's a little bit nuanced, I appreciate that, but that's part and parcel of the whole business of using the VPOC histogram to give you the information as to where the market is likely to be heading next. Because if you're approaching a volume point of control, you can be rest assured that it's probably going to congest there. So don't expect it to just quite happily and gaily move through there, you know, on volume. So what we're seeing here down at the volume point of control, we're starting to see, you know, a little bit of buying coming in here. What we've got here is a move to the downside, but there's very little volume associated with it. So in terms of the selling pressure that was going on here, you can say, well, actually, do you know what? The selling pressure has diminished somewhat, and there's now being replaced by a little bit of buying. We're starting to see this jump up a little bit, but then there's a little bit of weakness comes in on this candle. So it's not, you know, it's not hugely strong at the moment. Don't know why that's gone. I think I've dropped out on.
I think, do you know what? Your chart's not up to date.
Yeah, it's not updating. My feed's dropped out. How bizarre. I thought it was pausing for a long time, and that's gone very odd. Hopefully you can still hear me. Okay. Yeah, I think I'm going to have to wrap up there anyway, because we've gone way over time. There were a whole bunch of other things I was going to cover, but I'll have to pass on that and maybe cover. Let me move over to Anna. Hold on a minute.
Yeah, I asked David to just have a look at the 3-minute chart for cable because of all this massive volume that came under here. In fact, the VPOT was lower down because the this bit of the price action was actually a really nice breakaway. Now it's up, as David said here, it's moved up, so it will act as a support. We need to see volume going into the candles to move this price higher. Well, you know, where is it? Where is it heading to? Well, it's certainly heading to this area. It's just below. It's probably 129.25. So it's got to get through there. But just to give you just a look at volume generally, hopefully the chart will be okay. This is the 15-minute chart and the 30-minute chart. We were looking at areas of denser areas of volumes. I think my machine's not updating either. Here we are. We can see here it's the price prices always struggle when they go up anyway, but they struggle even more if they're going to have to go through what we call these dense areas of volume that is being created, as I said, from the on the volume point of control histogram. And this is taking volume price over time, and it's reflecting the zones, if you like, going back where we've had this this congestion phase. So it's going to struggle. It's going to take, it's going to take effort. It's going to take effort down here, but it's also going to have to take effort actually wading through the volume that is being created from the VPOT. As I said, markets always grind higher. They always fall a lot faster than they go higher. And I shouldn't have really changed that. What have I done here? Let's have a look about, because I've got the so that's why we're kind of seeing a struggle here. Now, I mentioned the using a Renko chart together with a time chart. And what a Renko does, it actually, first of all, it smooths out all the fluctuations and the oscillations that you get with the candles. So you're also looking at raw price action. This is moving up. Each the value of each of these little bricks or little candles bricks is 2.5 pips. This is what the indicator has come up with as a value. But what it does is, as you can see here, you can see the trend. It will also pick up the corrections, the periods of congestion, and then you will either get a resumption of we call that the primary trend. This is a secondary trend, and then we get the resumption of the primary trend. This indicator here, which is the trend monitor, the way we suggest that you use the trend monitor together with the trend dot that you see here on a Renko chart is that you look for a confirmation of the bright color both in the dot and the trend monitor. We didn't get the transition into the bright red as we saw back here, or so the bright blue when we saw this was the start of this trend higher. So it's up to you. If you see the trend monitor flopping out of a bright color into the intermediate color, and you know, the bright color doesn't come in, it depends. It's what you see on the chart. You think, well, do you know what, that's awfully interesting. It hasn't actually, it very rarely transitions from a bright straight to a bright color. It does happen, but it tends to go through this intermediate, and that means that it is in some sort of congestion. So you have to take that decision. If you've got a decent amount in the trade, then you think, you know what, you know, it's coming into a congestion, it might go higher. Certainly look at the chart and see what the volume is doing. Where is the VPOC on the time chart that you use the Renko with? I mean, I've got it on with the 3-minute. You can use it with the 5-minute. But the beauty of this indicator, it helps, as I said, it helps to keep you in. We've had this little pullback, and that's all it was. It was, you know, but there was a lot of volume going in underneath those candles. They were, some of them were down candles, but it wasn't falling. And, you know, we look for confirmation of price action and volume, but we also look for anomalies. I mean, someone on one of my Twitter feeds, there's a guy out in New York who is he has a prop trading firm. His name's Mike Katz. You can sort of looking him up on the internet. He does a lot of videos. I'm sure he won't mind me mentioning his name, because he very kindly, you know, when people ask him, you know, what he uses, he actually uses VPA. He very kindly references the book. You know, and other traders have bought the book and are very grateful. And that's what he does. He's actually set up his charts in such a way that he marks up the anomalies that he recognizes, and you know, he day trades, and he has a very successful prop firm. So, you know, I'm grateful to him for mentioning the methodology. So we're looking for anomalies, not the confirmation, but also anomalies, because what anomalies tell us is, again, it tells us, aha, this is just a ruse to try and get us to, as we saw on cable, maybe to put a short in. And in fact, what's happening is the price is trying to move higher. And I also have here our Camarilla indicator, because I need to know, I'd like to know, you know, where is this heading to? And obviously the R4 is, you know, is that level there at, let's have a look, let's move that down, 129.45. If it gets there, it's just all these little clues to help you stay in. Now, if you want to get in, you then have to decide the decision. You have to, especially if a trend is also underway. You then look at the correction. Was it actually a reversal or simply a correction? In which case, possibly the point of entry is once it clears as we saw here, the high, it's got to get through this point here, and you possibly could consider joining this trend here. But be aware, on the slower time frames, it's got to, you know, it's going to struggle to move higher. Where is it going to likely to be heading for? Well, you know, the levels that are on the charts marked up for you, either through price action with the Camarilla, the accumulation and distribution, or an MT45 with the dynamic support and resistance. That is a target. That is a potential point where it is heading for, and it will pause. So, you know, if you've missed all this, maybe there's enough in there for you to go from here to here, and at least when you get to the R4, you know you are possibly going to get another pause point. And just looking at the CSI, and what I've done is, I actually, with the pairs that I follow, I actually take, as David said about the blinkering with horses, I take all the other currencies off, because it's, you know, it's what happens is, if you are focused on 1 or 2, 3, 4, 5 pairs, sometimes nothing is happening. And, you know, you could have the CSI and there could be a roaring trade in one currency, and you think, oh, I wish I was over there. Well, I'm not interested in, you know, one of the more esoteric cross pairs. This is the pair that I'm interested in. And what's interesting here is we saw, you know, it looked like we were going to have a reversal, as we saw here, that the pound was turning over, and certainly the, you know, the dollar was rising, and the dollar did rise, but the kind of pound kind of held its own, as it were. So this is still rising, and in the meantime, that short, you know, burst of buying in the dollar, you know, kind of, it then rolled over once again, and that buying of the dollar probably was obviously in another pair. You know, it didn't really shift what was happening in cable, and that's what the CSI will also do for you. And also what we can see here is, if this is moving sideways now, we could actually have a situation where we will now move into another congestion phase before we have a firm direction one way or another. So just see if there are any question. Right, this one. Oh, you've done that one. Brilliant. Okay. And what about the previous one? Is that so? You've got the one question about the VPOC? Hold on. I've done as well. Okay, fine. Right, so we'll wait to see. Interesting what happens on cable. We'll see what happens. And just finally, I think, just want to mention something else about the array. I know we didn't touch on it. I forgot to ask David to do it. Right. With the array, it was again from a question from one of our users and wanting to, you know, put these indicators together. The settings of the array are similar. The default settings are similar to what you see on the CSI, but the way you use it, I have found, if you want the array and the CSI to kind of more match up in terms of what you're seeing, is you can't really do it via the settings. Don't ask me to give you the technical reason for it. I'd be here for the next hour or so. So one way you can do it, you can make it mirror more what you see on the CSI, is you have the array in different time frames. You have it on a faster time frame. So for example, I have the hourly CSI here, and I have the hourly matrix, but I have the 15-minute array. And if you look at the trends that you see on these on the pairs, you will find that you will have a degree of consistency across the three indicators. You'll never be identical, because these indicators are all designed to give you different bits of information. If you imagine you're driving a car, you're flying a plane, all your instruments give you different bits of information which you put together to have, you know, to give you the complete picture. Now, obviously, with your instruments, you can't adjust them. You can with these indicators. So if you put that on the hourly chart, you will find, you know, that the pairs will look, you know, how the pairs appear will be very different, because it is taking a more, it's a bit, the array works a bit like the trend monitor. And if you like, you want it to behave more like the trend dot, which, you know, is closer to the market. In which case you can do that by making it, setting it to a faster time frame. As I said, I've only the ones that suit me is the 15 and the hour. You have to kind of play around with the time frames to find the one that you know, you're happiest with. Right, that's all I wanted to say about. Can I pass back to you now if you sorted yourself out? Lovely. My name's Katz, K-A-T-Z. Okay. No, it's not possible at the moment, because I have to sort out the order flow on Ninja, and we're not going to be dealing with order flow until the TradeStation platform is launched, which I think is going to be back end of this month.
Just back with me. Sorry, the Kinetic dropped out for, I don't know why. Must have had a break in the broadband for some reason. There we go. Really just to, I'm going to wrap up very quickly, but I just want to show you this as well. This is on currency futures, and this is a very similar approach to using it as opposed to spot. So this is the dollar matrix on futures, if you will. I've got the 6A Aussie, 6B pound, 6C is dollar CAD, but it's CAD dollar here. 6E is the euro dollar. 6J is yen dollar, not dollar yen, which is why I've got the curious numbers down here. And the 6N is the New Zealand dollar. And you know, the nice aspect is you're looking at dollar perspective. You're seeing the trend monitor here, blue throughout. So you're looking at related markets within a sector, if you will, within the same environment. You're not looking at related markets, but you're actually looking at related pairs on the dollar. And the nice thing with futures is that it's all in the same direction, because the yen is quoted as yen dollar, not as dollar yen. Dollar CAD is quoted as CAD dollar, not dollar CAD. So these are inverted. And the one point I wanted to highlight was really this aspect on the dollar yen. The dollar yen, or in this case the yen dollar, is a fiendish pair to trade. It does not behave in the same way as the other yen pairs in the matrix. There are multiple reasons for that, which we explain in detail in the Forex program. It is a complex pair to trade. You've got to understand all that if you're going to trade the dollar yen or the yen dollar. And what's interesting in this phase of price action, you can see, remember, this is selling of yen and buying of the dollar, which is actually in complete contrast to what is going on elsewhere. The dollar was selling off broadly, but in the yen dollar, it was the opposite. In addition to that, you've also got a very nice example of volume falling away. We've got a move to the downside, and we've got volume falling away. What is that telling you? It's telling you that the pressure of selling is weakening, because if this was strengthening, the volume would be going this direction, and it isn't, it's going that direction. So therefore, the selling pressure is weakening, and therefore, in exactly the same way as you're looking for volume rising on a rising market, you're looking for volume rising on a falling market, because it takes effort to go up as much as it does to go down. So I just wanted to highlight those little lessons there for you as well. Trading around congestion, Swiss franc selling off strongly, yen starting to tick up. And the reason you're starting to see the yen tick up, if I pull over the VIX finally, here we go. This is what went on yesterday. Big spike in volume, big spike in the VIX rather, big reaction. And what we're also seeing here is the VIX is still trading around, you know, the high 20s and just below 30. It's been here for an awful long time. Volatility candles, trading with inside the spread of those ranges. You know, this is not looking terribly good for risk sentiment, because if the VIX starts rising exponentially, then equities will sell off strongly. So that's what we saw yesterday. You can see the VIX here ticking up on the 1 minute, starting to tick up on 5. You're going to see yen buying coming into the market on those faster time frames. That's it. I'm going to have to run. Just pull up where everything is. This is where you'll find all the indicators, quantumtrading.com, MT45, NinjaTrader 78, TradingView. Yes, TradeStation is coming. I can guarantee you it's going to be launched this month. I can't tell you exactly when, but it will be sometime this month. It's taken a lot of effort. We've got 2 platforms effectively. You've got TradeStation Global, which is with the interactive brokers feed on 9.5, and then you've got TradeStation Securities on version 10 and above. Radar screens, fantastic. TradeStation platform is an amazing platform. Really got all the bells and whistles there. So we will be doing a separate webinar just focusing on TradeStation. We'll be doing order flow, we'll be much more on stocks on that platform, and lots of good things to come there as well. So that's where we are in terms of platform. If you want to keep an eye out for that, head over to Quantum Labs. That's labs.quantumtrading.com, where you'll get all the latest updates as we roll things out there. To follow Anna, it's annacooling.com. You'll find all the books. They're up here. They're on Kindle, but they're also in paperback as well. Very proud to say we've got the Vietnamese version being worked on, so that will be coming out very shortly. And we're also talking to some other publishers around the world as well about taking that and translating it. So we're delighted that that's going so well. And huge sales in Japan, in mainland China, in Taiwan, all over the place. So it's really taken off big time. So we're absolutely thrilled and very humbled by the take up. In terms of the Forex trading course, you'll find that at the complete Forex trading program here at quantumtradingeducation.com. We called it that because that's what it is. It explains to you in detail, in depth, what you need to know to trade this market with confidence. We start with the psychology module, massive fundamental module, huge relational analysis module, and then this deep dive into technical analysis and the mechanics of trading module. And there's 200 hours plus of video and podcast content in there. And as I mentioned, it's backed up with our VPA chat room, which is hosted by Anna and myself every day. So you can always talk to us there, and lots of other students in there as well who are doing lots of good things, and they are very supportive also. That's it. Really appreciate you coming along today. Sorry it's gone over time. Apologies for that. We will be back this afternoon. The VIX is ticking up. It's up 29.6 now. We will be back this afternoon at 3, is it 3 o'clock or 3:15? I can never remember. I think it's 3 o'clock UK time. So we will see you there on the future session. If not, enjoy the rest of the trading day. Next week, God willing, we'll be back to Tuesday again for the rest of the year. Apologies about having to move it, but we just had something that we had to sort out personally yesterday. So next week it will be back to Tuesday, but you'll always get notifications anyway if we do move things around, so you'll get the emails coming in. Enjoy the rest of the trading day. Thanks for coming along today. We do appreciate you joining us and spending time. Sorry it's run over time, and we will see you either later or same time next, well, not same time, well, same time, but different day next week on Tuesday. So bye for now.